Attention to the US Federal Reserve, once again in the spotlight with its first interest rate decision of 2025, and that is due later tonight. But this time, an added layer of intrigue because the Fed chair, Jerome Powell, has signaled a measured approach. The newly re-elected President Donald Trump, he has wasted no time in calling for aggressive rate cuts. He's, of course, raising that question, will the Fed stay the course, or is Trump's pressure going to prevail and tilt the scales, as it were? In December, of course, you'd recall the Fed cut rates by 25 basis points, third consecutive cut. It brought the benchmark range down to 4.25% to 4.5%. But since then, inflation has proven quite sticky, the economy in America remaining robust, and Powell has indicated only one or two rate cuts in 2025. But now Trump is back in the White House. Markets are watching closely for any signs of a policy shift. Will the Fed rates hold steady? Will Trump's influence shake up the central bank's independence? What does it mean for Wall Street and Indian investors? To break it down, Anurag Singh is joining us, managing partner at Ansett Capital. And Sudeep Bandyopadhyay is also with us, group chairman of IndiTrade Capital. Gentlemen, let's dive straight in. Anurag, the Fed's December cut was largely expected. Powell, though, has since indicated a much slower pace of easing. And this despite the push coming in from Trump for deeper rate cuts. And given that inflation, in their words, is somewhat elevated, do you think the Fed has the leeway to cut rates anytime soon?
Welcome. Morning to Sudeep sir as well. Good evening, rather, I would say. Vikram, I think much of it is due to the market forces. We should keep in mind that Federal Reserve has cut 100 basis point, right, in quick succession, basically, 4 or 5 months. But the 10-year yield has actually jumped over from 3.5, 3.8 to actually 4.5. It went even up to 4.8 some time back. So the point is, Federal Reserve is also bound by the market realities. I understand, and I think Chair Powell made it pretty clear that the monetary policy was reasonably tight then, and I think there was a room for cutting the rates, and that's what has happened now. But at this point, when they are about 4.25 to 4.5, they went down 100 basis points pretty quickly. They got to wait and observe here, right? Because there are a couple of uncertainties. One is around what the new administration will do, what policies that it takes. There is a talk of tariff. How does that play out? Already, that is being factored in the strong dollar and the strong 10-year yields. So yes, money would rush to US. That's one element. Second is the whole fiscal conundrum of US, which is, it's running on a 6-7% deficit. So I think coupled with these two things, and the third point being that inflation, yes, of course, it's on its way down, but it is still hovering at 2.7, 2.8. So not exactly 2, right? So I think this confluence of these three factors really tells us that, they need to wait and watch. And really, what is the hurry? The final point is, they're not going to 0. They're going to stay at 3, 3.5. It's a debate. Some people say 3, more optimistic. Realistic number is 3.5. We get to 3.5 eventually as the long run rate. What is the point?
Right.
Sorry, Vikram?
Yes, so you're saying that they'll go with market forces, and that's going to be the overriding theme in their decision. Mr. Bandyopadhyay, do you agree, for one, and the US monetary policy having that strong spillover effect on emerging markets, and that includes India, the Fed's stance is directly going to impact FII flows and the Indian currency. And if Powell holds those rates steady, tell us what you think Indian equities will do.
Well, I completely agree with what Anurag mentioned, and I'll add on top of that the fact that a lot of the policy statements which is coming out from the Trump administration, and even pre-election, when the kind of policies he was talking about, President Trump was talking about, may lead to further fueling of inflation in US. The imposition of tariffs on goods coming in from Mexico, Canada, China, incremental tariffs, that is, I think will be inflationary. There is a talk of significant tax cuts in US that will fuel consumption and probably push inflation up. Dollar is very, very strong. So I think all these factors, so Powell will have to keep in mind when he takes a call on interest rates in US. So under the circumstances where inflation is already sticky, the 10-year yields have gone up already, I think it will be extremely difficult for the Fed chair to go for any kind of rate cut at this juncture. they will prefer to wait and watch how things stabilize in
Exactly.
US. Where do the policies take the inflation to? And I think then they will kind of take a call.
Yes.
And I completely agree with Anurag that what is the hurry? I mean, they will prefer to wait and watch. There is no compelling reason for them to cut interest rates at this juncture.
Not at this point in time. At least both of you seem to suggest that not right now. You'll see how it plays out, and that's what the Fed, you think, will do. But Anurag, the impact of Trump's return to power is one of the largest elements playing out in the decision, and perhaps if not tonight, it's going to be seen. The Fed has long tried to maintain independence, but Trump has been quite vocal. He's almost demanding rate cuts. In 2018-19, I recall, we saw him publicly criticize Powell for keeping rates too high. So do you think Powell is going to push back against political pressure, or could we see the Fed soften its stance in the months to come?
Yeah, Vikram, I think and usually the media in US it's correcting fast soon and it'll correct, but the media usually is left-leaning. There's a attempt to really spin doctor the utterances of what Trump says and what he means. I heard him as much, but look, I think what is worse is, he understands, he said, I demand a rate cut, but he's saying it openly, and it's an opinion, and presidents can express an opinion, and that's one thing. But what Biden did was the kind of spending they did at 7% deficit when the country is at a 3.5% unemployment, that is criminal, and that forces Federal Reserve's rate, hands to keep the rates high. The point is, who does more damage to the economy? I have really different opinion on that. I don't think President Trump, and if somebody has to control really Federal Reserve, they won't come out so openly and talk about it. So I think understand much of this is the news bliss that he tries to throw out 10 different things in different directions, and people try and catch the ball, whereas he's aiming at some other things. So I think media is already grappling and struggling to grapple with 20 different initiatives, and where to let go and where to kind of hold the ball. So I think that's a strategy, Vikram, but I would much rather like this open debate about what the president thinks about the rates, and it's an opinion.
Right.
Versus
Fair enough. But you think whatever direction he is...
to the regulators,
yes, but in whatever direction you're saying, the president is chucking the ball, Fed may not try too hard to catch it. But Mr. Bandyopadhyay, the Fed has signaled only 1 or 2 rate cuts this year. What's your outlook on the RBI's policy? India's inflation, largely supply driven, and the RBI has been really in no hurry to ease rates. Now, if the Fed decides to hold, could that delay rate cuts from the RBI as well?
Well, I think Indian central bank has a different set of problems altogether. And that's the reason why they have not been able to cut rates till now, while pretty much all the central banks all over the world, except Japan, which has a completely different dynamics, have been cutting rates. Couple of things. One is inflation in India had been sticky. They have come down in the last couple of months, but prior to this, they were sticky. And there were challenges in bringing down inflation, and RBI has been grappling with that. Now, while the inflation has kind of started coming down in India, we have a challenge as far as currency depreciation, and sharp one at that, and pretty quickly. Now, under these circumstances, RBI again is in a very, very difficult position to consider a rate cut. But look at the dilemma RBI will have. Growth has been slowing down, and probably they need to go ahead with a rate cut to ensure that the growth momentum doesn't get lost. They still have to grapple with all these facts: A, inflation; B, growth slowing down; and C, where the currency is headed and what will this rate cut or otherwise have an impact on the currency further. Now, these are the factors they have to consider. But I think they have managed things pretty smartly. The infusion of 1.5 lakh crore of liquidity, which they announced a couple of days back, I think is a step in the right direction.
Right.
And I personally believe that even if they hold rates on 7th of February and keep supporting the market through incremental liquidity, to a great extent, the purpose will be served. But one thing will be missing, which is the signaling.
Right.
Rate cut signals, to a great extent, certain things which will be missing if they don't cut the rates.
Fair enough.
But I think it's a 50-50 chance whether rate cut will happen on 7th February or not.
All right, fair enough. Very quickly, Anurag, what's more likely, rate cuts starting in the second or third quarter of 2025? And if it's just 2 this year, When do you reckon the second one is going to be?
Yeah, Vikram, no, that's very hard to predict. But I can tell you once I know the March CPI data, right? That'll be
All
easier.
right. So you're going to wait for that one to come out.
Yeah, yeah. But the larger point is that we can expect 2 rate cuts this year.
Right.
Inflation largely contained the messages that it will get back to 2%. The signals, wage inflation and core CPI, everything is kind of falling in line.
Right.
It's going to take time, but it's get to 3.5, right? But
Yes.
it's going to stay at 3.5. That's the larger message, which is not zero,
Right.
which is so, there's a change of stance
Right.
regime there.
And Mr. Bandyopadhyay,
Yeah.
before we let you go, the biggest risk for the Indian markets in the next 3 months, according to you, quickly at that.
Well, the biggest risk to my mind is what happens as far as global tariffs and interest rates are concerned. So it will come from the global markets. Look, I think the global market and global news flow will determine which way the FIIs will move. And if FIIs continue the selling, which they have been doing for the last 6-7 months, I think it will be extremely difficult for Indian markets to show significant amount of recovery. Yes, a good budget, a lot of liquidity support by RBI can help the market to an extent, but I think we will not have significant upside from here unless the global mood changes.
Fair enough. So clearly the Fed's decision tonight, it's not going to be just about interest rates. It's about the central bank's credibility, political pressure, of course, market expectations. All of these are colliding. And Trump may want deep cuts, but Powell has a balancing act to do. He's got to fight inflation without stoking fresh economic risks. Whether the Fed stays firm or starts bending, one thing's for sure, markets are going to react, and they're going to react sharply. A big thank you to our guest, Anurag Singh, Sudeep Bandyopadhyay. Thank you for joining us with your insights. We'll keep tracking the Fed's moves and the ripple effects it causes. But for now,